Hi, guys, and welcome to my favorite day of the week. And I can't say favorite because we've got some other surprises coming for you, but he's certainly one of my very favorite people to do this live show with because I feel like you bring a lot to the table.
Oh, thank you. Thank you very much.
So I'm going to warn you that this Thursday, because we're going to start having this conversation right now, that this very intelligent young man and strategy specialist has put together a very important piece on these mega IPOs that are coming about.
Yeah. A lot of stuff going on with them for sure. And it's finally kind of making the news cycle. I think people are getting more worried about it or aware of it.
Well, you said something interesting before we came on air, which was when you very first started. So this is now more than a couple of years ago.
Yeah.
Right. That we were talking about mergers. Do you want to, because he has a fresher memory than I do.
Well, yeah. So this was, me and Lynette, when we were having our one-on-one, you had mentioned, okay, you'll always be able to know when you're getting to that terminal end of a currency's life cycle, because you just need to pay attention to all the mergers that start happening with these mega corporations on Wall Street. And it's really kind of what we've started to see. A lot of a lot of companies getting taken over by others, and these upcoming mega IPOs, the amount of liquidity or the amount of funding that they're going to require, not only for the initial IPO offer, like the initial offering, but to continue working as companies or continue going on as companies. So I think it's all kind of coming to a head. And
well, I think so too. And I'll mention over the weekend, there is this movie. And if you guys have never seen it, if you've never seen it, you want to make sure that you do see it. It's so flippin' interesting. And it's called Gabriel Over the White House. And it was filmed in 1933.
Oh, wow.
So it's a very, very interesting year, right? So definitely watch it. But the reason why I bring it up is because if you look at the bar chart on the screen, what do you see? 5 trillion, 4.4 trillion, 4.4 trillion. Okay. In this movie, when you listen, and I watched it this weekend because I knew this soundbite was in there and I'm going to use it. And he says, and he was talking to global heads of state.
Okay.
And he said to these people, and now remember, this is after World War I. And there were a lot of, we funded a lot of development during that period of time, especially in Europe. They sent over a lot of their gold. And he's telling these diplomats and these presidents of these European countries, and you must pay back what you owe. Okay. And so, Mr. France, you owe us $100,000. They didn't even have the word billion then.
Right.
That's the point, because that's the beginning of this experiment. So when you see these numbers, 5 trillion, 4.4 trillion, it wasn't all that long ago that was so far away from where we were. It's not that these companies are worth that much money. It's that all of this have grown these companies and they are worth that much less. So in less than 100 years, we've gone from 100 million, 1,000 million to trillion. That is an indication of the loss of purchasing power.
Wow. Yeah. And it's like, you're right. It would be inconceivable for somebody to think a company could be worth 5 trillion. That's the worth of this company, $5 trillion. And when it comes down to is that's all just corporate debt, right?
It is. And it's also speculation because these are an IPO. So how do they know what the value is?
Oh, yeah, that's exactly what we go into in the video that's going to be coming out on Thursday.
Oh, yeah, totally. Yeah. This is just wetting your whistle for that. Can we see the next slide, please? Let's see, we'll get this up there. There we go. Okay, because this is hyperscalers and the CapEx surge. So this goes back to what we were just talking about. And Jessica actually found this graph. Good job, good job. And what this is showing is the AI CapEx surge. So all the money that they're spending, all the debt that they're growing, all of the equity that they're issuing. Well, these large hyperscalers used to fund everything internally with the free cash flow.
Right.
Can't do it anymore. They need way too much. And by the way, what are their valuations based on? Do you know?
Well, yeah, I mean, it's definitely not based on their profitability because they're
Depends on, OpenAI.
right. They're not making
It's based on the latest round of funding.
Yep.
That's what it's based on. The latest round of funding.
Wow.
I know it, right? So we don't know what they're worth. It doesn't matter.
Yeah.
Value, that goes back to the trillions.
Wow. And I mean, you see just from even 2004 to now 2026, how large that credit spread has become.
Look at this. And it's saying free cash flow fades. And the other thing that I find, kind of interesting is that while some listing agents have changed their rules, which I know you're going to talk about,
Yep.
right? Others want you to think they have not, like the S&P 500,
Right.
except that in their funds, they can be listed.
Right.
Right? So they're going, look at how we're trying to protect you. Not really.
Yeah, you're right. Exactly. That was kind of funny too, because that really, since it's the largest of, I think, the like retirement funds, if they just outright came out and said, oh yeah, no, there's no, the restrictions are off on these mega IPOs, they can get included, 5 days after being listed. I think they're intentionally trying to subvert any of that backlash, because people were getting kind of freaked out about that. Like, oh, my retirement account. And they don't have any idea really what's going to be coming with these mega IPOs. If you've got a traditional, retirement account, something that is attached to these indices. Yeah.
Well, can we hear that soundbite? This was on Bloomberg.
But essentially, it's one of the largest private credit deals ever. Apollo and Blackstone are coming together to basically create this SPV that then is going to raise debt
SPV,
from
special
both
purpose
Apollo and
vehicle,
Blackstone, but also other investors. The money is going to be used to purchase semiconductor chips that power AI. This most recent capital raise specifically will first be used by Anthropic. So Anthropic will lease the custom chips that Google and Broadcom have partnered to create. If you zoom out a bit, what it's basically showing us is that chips are really expensive, and Wall Street needs to come up with these very creative financing structures to be able to create the money to buy chips for AI.
There's so many things in that clip. Go ahead.
Well, I mean, yeah. So this goes right back to when we had our one-on-one a while ago. These companies are having to merge together to create the SPVs in order to have the conceivable funding for what these companies are going to require. Again, to have that value placed on them, or their evaluation for an IPO, and to continue operating, they need the chips. So they and it's almost like there's no free market in that, because what if they're like, okay, great,
they're custom.
Yeah.
Right. I mean, they said they're custom chips,
right,
which means that they're made specifically for this person, or this entity.
They can mark it up as whatever they need.
Well, they can, but it's that circular funding.
Yeah.
Right. What could go wrong? Let's put this in the retirement account. After all, look at all the trillions of dollars that are in there, and who's going to complain about that?
Yeah.
But one of the things that I saw in this, that you just kind of go, you can't make this up, right? If I wrote this, you go, that's science fiction. But in reality, so we've got a company that goes to another company and says, well, I want you to make me these custom chips. And it's circular. So we're going to take on debt to fund these, and that'll give you the money, even though you're not really OpenAI. You're not making any money, and we don't know if you're ever going to make any money, but you're certainly worth 4.4 trillion or 5 trillion or whatever. Could that be because the dollar's not actually worth anything?
Right.
But that's like, I'm going to give you the money to buy stuff from me.
Yeah.
That'll make my balance sheet look really good. I'm going to borrow it over here, and then I'm going to spend that money over here, which means if I need to pay back this money over here, and for some reason inside of the circular bubble, something goes wrong, do you think you're getting any money back?
Nope.
Nope.
Not at all.
Yep. So really interesting. And is there any way, and I know this is kind of a big ask because Jessica is learning how to run this and Tom is sitting next to her. Can we just have that last little piece where she actually says that they have to create that money?
Right.
They got to do this.
But essentially, it's one of the largest private credit deals ever. Apollo and Blackstone are coming together. The money
Wait, we're getting
to create the financing structures to be able to create the money to buy chips for AI.
Yeah, because money is created from debt.
Yeah.
And you guys, we are all of us, including me, working for corporate debt, but I converted it into sound money
Right.
as quickly as possible.
Yeah. Yeah. No, it's very interesting for sure. And again, it just shows that it's a big dog pile on top of just trying to squeeze the last itty bitty amounts of purchasing power out of this corporate debt that these companies need to do before the terminal end of the life cycle of the currency.
And that difference between in this K-shaped recovery,
Mm-hmm.
I mean, trillions, quadrillions.
Yeah,
Why aren't we?
why
We
not?
will be at quadrillions at some point in the reasonably near future.
Yeah.
Just like my $10 trillion Zimbabwe note. And it doesn't matter if it's physical or it's digital.
Mm-hmm.
This has absolutely zero value.
You can't buy anything with that?
Not even one egg.
Really?
Not one egg. Doesn't matter how many zeros it has.
Right.
It matters what you can convert it into.
Right.
So is there anything, because I'll get to the questions now, but is there anything else that you want to say to set up? You don't want to miss this on Thursday. This is really a good video.
Yeah, thank you. No, I mean, yeah, I think it's something that all I can really say is as these mega IPOs happen, I think it's going to change how people might look at the stock market if that's that consumer confidence piece and it begins to get even weaker because of what corporate America is doing, but it's because they have no other choice. Right? They need to have these mega IPOs. They need to continue this, as you said, circular funding of corporate debt because they need to be able to ride out this coming currency reset as well, right? That's what banks are doing it. These mega corporations are doing it. Everyone out there that we speak to needs to do it. And we actually have a strategy to allow you to do it.
Okay,
So-
do what?
Survive this coming reset.
Oh, yes.
Yeah.
Okay. Yes, we do.
So right. So the banks have their strategy. These mega
Mhm.
corporations have their strategy. As Zang International, we have our strategy to allow everyone out there just at the very least have the conversation with us, right? To see what that looks like
Mhm.
to survive the coming currency reset. Because
Now I want to talk about this, and I'm going to put them on the spot here because
Yeah.
we have not had this conversation yet.
Mhm.
Okay. So keeping in mind these mega corporations or any entity on the stock market, take your pick.
Yeah.
Where could that possibly fit inside of the strategy?
well, if you're talking about like how if people have actual like stocks right now,
No. Let's
Okay.
say they don't own any stock at all
Okay.
at this point
Right.
in time.
gotcha,
Okay.
gotcha, yeah.
And we're in the melt up phase. Where could what's happening in the stock market
Hmm.
fit into the strategy? I probably shouldn't have asked him this.
No,
I
it's
didn't
okay.
warn
I mean,
him.
'cause
I
I'm-
didn't even think about it, but it makes a lot of sense because really we want them to know, and we're all together. So I want you guys to know this. You can see we talk to each other all the time.
Yeah.
He knows where I live. I
Yeah.
don't know where he lives, but I have his address.
You do have it, yeah.
Right. So we always come together to make things better and better and better. And one of the ways that we future-proof the company is by working like this, so that I get to share share my knowledge with him, but also you have a different perspective than I do. So
Right.
that brings in, I mean, we learn from each other.
Mhm.
And we all work together, not just the two of us, but really we have a great group here at
Yeah.
Zang International, and we all work together. So I'll give you a minute to think. Do you
Yeah,
think
well,
it-
so
I know.
I was thinking exit strategy, but you're talking.
No, I am
Okay,
talking
okay,
exit
perfect. All
strategy.
right.
So you're right.
Okay,
You're
good
right.
deal, good deal. Yeah.
Keep
So
going.
yeah, that's part of, again, you look, you can buy metals from plenty of different places, but as far as I've ever seen, nobody has an exit strategy like we have here at Zang International, where it's like, okay, what do you turn that strategy into? What do you turn your portfolio
What do
into?
you turn your sound money into?
Your sound money into on the other side of that reset when the smoke clears, and we can see which of these corporations.
Do you see why I'm so proud of him? Because he knew it, and I
Right.
did not prep him for this.
No,
No
nope,
crossies count. I raised my right hand to God.
Nope.
No crossies count.
no,
That's it.
but yeah, and then so we can see which of these companies is going to be left standing, and therefore ride that market back up, because it's going to crash. It has to get to its true fundamental value, right?
Right?
And nobody can perfectly time the bottom, right? That's just
No.
luck.
That's
That's
part's luck.
Yeah.
All we're looking for is that accumulation pattern
Mhm.
that lets us know that the big money
It's going
has
back in.
identified that undervalued asset.
Yep. Yeah. And then,
Yeah.
so that's part of that income producing asset that, again, you
got it.
can turn this into an income producing asset that neither you nor your heirs can outlive in some
Right.
cases.
Because what these guys are really doing is they're creating the money by creating a mountain of debt. That's what they're doing.
Right.
But this debt bubble has already popped. And so all that's doing is pushing that debt bubble bigger and
Yeah.
bigger, which means that when it becomes apparent to the public, I don't know how much bigger than 2008 it's going to be, but it's going to be a whole lot bigger because there's a whole lot more garbage that was pushed into the system.
Yeah, absolutely. And that's part of it too, where we're at in the awareness stage, right? It is an unfortunate thing where it's only when sometimes it's too late, like everything's already in motion, that the
That's it.
general public starts to be like, oh, this is a problem. Well, there's no stopping it, right? That train's already left that station.
And there's no time to get prepared.
Right. And there's no time.
There's no time to
Yeah.
get prepared. That's the problem.
Yeah.
Right? We get to a point where nothing you can do.
Yeah, exactly. So I definitely do view these mega IPOs though as a very telling sign of where we're at in the currency
100%.
life cycle. Just purely, even if we're just looking at it from a numbers perspective.
Oh, it's ridiculous.
Yeah.
I'm going to loan you money. You buy stuff from me, and then I'll turn around and buy stuff from you. But it's all borrowed money between the two of us. So
Mhm.
it makes us look great because, after all, now I'm selling more. You're selling more. Everything is hunky dory
Right.
until it's not. Because if they don't have the free cash flow to service this mega debt, and things don't go perfect, because this is a big experiment. I'm not saying this stuff is going away. I'm not saying Anthropic is going away,
Right.
right? But what I am saying is I do not have clear visuals into these corporations to know whether or not they're going to survive this.
Right.
I do, however, have gold to hold my purchasing power so that when we see who will survive,
Yeah.
all of that fiat money inflation will be burned out. And so we'll be able to take our gold and convert it into those entities that we know can survive. Because there's so much stuff that's done off balance sheet, but this is like open, but people don't understand it. But
Yeah.
it's incestuous, which means that if anybody inside of this big loop, because it's not two entities,
No.
it's a handful, but it's not thousands either. It's a handful of these mega corporations that are now incestuously intertwined. And by the way, you guys, even though a lot of this is debt, they're also incestuously intertwined into the banking system where you have your savings account.
Right.
You know where I have my savings account?
Yeah. Right.
Not in the
sound money.
banks. Right.
Outside of the blast radius of failure of the fiat system.
Yep.
Right. Because that's really what it comes down to. If you've got, people think of it as money in the bank. It's not even your money, right? You
think it is. Well, it is corporate debt.
Right. Exactly. And you're just lending it back to the banking institution that's lending it to these companies so that they can lend it to each other. I mean,
does any of this make sense to you? Because if your head is swimming, you understand it.
Yeah, right. Exactly.
Right?
It's like this giant, I don't know, what's that thing, the Ouroboros that just eats itself, like the giant snake eating itself type of thing. Yeah.
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 Actually, yeah, you're right.
Yeah.
It is like an Ouroboros. I did not know that was the name. All right.
Yeah.
Well,
yeah.
let's go to some questions.
Yeah, we'll go to the questions. Sorry,
okay.
we got sidetracked.
But that's okay. But do not miss Thursday. Do not miss. So Schaffner Media Productions asks, maybe a stupid question, or no such thing as a stupid question, but is it a good idea to buy gold Valcambi combi bars 100 times 1 gram or 50 times 1 gram, or are bullion coins best? 1 ounce of gold is quite pricey. They have high premiums on it. And part of, now I know that you're not in the US, so it might be okay. I mean, in terms of silver, I think it's absolutely fine because you want to be able to break it into itty bitty pieces.
Right.
Gold has me personally a little more concerned because honestly, desperate governments do desperate things. And I've shown you the tables of all of the governments that have confiscated in one way or another the gold from their citizens. And this is part of why I say we need to take our power back, because they take away the tools to protect ourselves. They change the laws. That means that we can't protect ourselves.
Right.
And, look, having gold in any form or silver in any form is better than not having it, even with the premiums. Because people never want to either pay the premiums or pay the penalties. And so they make choices, emotional choices based on that, rather than logical choices of what is the next most likely outcome. So you've got to do whatever you're comfortable with, regardless of what anybody says.
Yeah.
If you are in the US, I mean, I don't own any bullion, and Valcambi would be classified as monetary or bullion gold. But having that is better than having nothing. And paying the premium, okay, got to go a little closer to the mic, but thank you. But paying the premium, what are you paying? What is that premium? But 100% if you do nothing. So, you've got to really kind of think about it logically, because when they establish rules, it's rules that they might spend 2 seconds on what they want to do, but many hours on how they're going to roll it out to you, because it's all about perception management. You want to talk about that a little bit?
No.
And then you're going to have to go.
Okay.
We'll just kind of lean into it.
Yeah. I don't know if my voice picks up maybe a little bit more, but I agree with everything, that you said. I mean, there's definitely, I think, utility to having the silver in those perforated, breakable pieces. But I mean, even just the different denominations of gold, you don't need to necessarily have perforated gold.
Here's a small one.
Yeah, right. So like you've got different diversification even within gold itself. So I would say, barter position is one thing. Your wealth preservation piece, same thing for me personally. It's pre-1933 gold that has historically survived any type of nationalization or confiscation by governments. So,
and keep in mind, every single country in the world at one point had gold and silver as their money.
Yeah.
So, it doesn't have to be US pre-33s, but it's definitely something that I think you should think about because, we are living through something that they probably won't live through for at least another 100 years after we go through this. It's a pretty big deal. It's a big deal. And Ernest DeBella, rock and roll doom loop hoochie coo. Okay. If we get sound, I actually really like that series, but I'm almost tempted, and I may just redo it because now we have Kelly and her, and I'd love to do it with her graphics and animations. So I hope you like that series because I think it's really good. And my mother always said, if it's true, you can say it. That's why I don't have any problem saying the work that I'm doing for these 2 events that are coming. I'm getting better at my work. I try all the time to get better and better. Let me know, you guys, by the way. If I do something and you don't understand it, that's on me because my job is to explain this. So is yours.
Yeah.
To explain this stuff in a way that you understand it so that you can make educated choices that puts your best interest first. Even if you disagree with us, we're okay. We love you anyway because we're a community.
Yeah, absolutely.
Okay. So if we get sound money restored, what will be my celebratory method? That's a good question. I think just getting it restored would be a huge celebration. So I don't know. I get to travel and go on some amazing trips because I go around the world speaking and exploring. I get to go to I don't know. That would just make me, I would be so happy with that because honestly, I'm doing it for the future.
Yeah.
That's who I'm doing it for. So if we could actually make that work, that would be I don't know what I would do. I don't know what I would do, honestly. Just be really, really, really happy. And actually also really proud at what we together, because I sure can't do it by myself, what we together accomplished I would be so proud.
Yeah.
I would be so proud. And Talk with Tiffany channel. How would anyone protect their 401ks at corporations? I'm going to hand this one to you. That's
Perfect.
easy.
Yeah, right. It's actually part of the strategy. So there's a couple of different ways that you can look at it, right? Some people don't have the ability to actually exit that retirement position. Again, because it's not your wealth while it's in their system, there can be restrictions on that. If you're still employed, they can put caps on, you need to have a good enough reason to borrow against it even, or
they'll put all sorts of parameters around it. But how do you protect your 401k?
So so exactly. If you don't have the option to take it out and put it in the strategy, you at least still want to be holding enough of the precious metals in order to have a safety net. So if everything inside the system goes to zero, it just crashes down to nothing, you are still able to be made whole outside of the system using the strategy. And that's actually a specific number for each individual person. It's customized. So you can always give us a call or book an appointment on our website to have that conversation with a strategy specialist, and they can just go over it with you right there in black and white, show you, look, this is where you're at. This is how much you have at risk inside the system. This is what it would look like to have that safety net put in place. And
proper diversification is really what you're talking about.
Yeah, properly being diversified.
Right.
Yeah.
So then really you made such an important point. The point of diversification is if this is doing bad, this is doing good. And what we have to protect ourselves from is making sure that we have our purchasing power.
Yeah, exactly. So
yeah, we calculated out. We know the true fundamental value of an ounce of gold. And I have to tell you that when you're looking at that, it may seem really far away, but just like the trillions in dollars that we were talking about, what if I told you that this 1 ounce of gold was worth $40,000? You go, Lynette, you're crazy. But if you went back to 1900 and said this $20 gold coin one day will be worth $4,500 or whatever that is, they would have looked at you the same way. But the difference between then and now is back then, everything was valued in ounces of gold
Right.
and silver. Today, everything, they've trained us to put value in this stuff.
Yeah.
And this stuff has no value.
Nope. Not at all. Yeah. It's
And that's according to the Federal Reserve. Doesn't matter what our opinion is. The Federal Reserve shows you it's worth zero.
Yeah, that's very true. It's and of course, also when we talk about the value, you brought up that fundamental value. That's the true actual value, not this contract futures
Trading,
price. Yeah.
right? That's a market trading. And unfortunately, people believe it. They believe the lie. How many times can you be lied to and you do not know the truth? Every single flipping time. And they believe the lie because when they talk about it, they don't say spot gold contract,
Nope.
silver contract, spot silver contract. They say gold. They say silver. So you think, oh, well, that's how much gold and silver are worth. No. And I can't give you a lot of guarantees, but 100% I guarantee you this. Number one, we'll show up and do the work. I can guarantee that for myself. Can't guarantee it for anybody else. But this boy does it. I know he does. But I can also guarantee you that at some point, every single asset and every single instrument goes to its fundamental value, which is zero. So that's how you properly diversify a portfolio. And we can take a look and see, whatever you have in there. And then that determines how much gold you're going to need today. But the more, I think I've used up my gun. The more of this,
I have it on standby.
Okay. The more of this they do, right? The higher that number goes.
Yeah.
So, to see an ounce of gold at 3 trillion, it's like my $10 trillion Zimbabwe note.
Right.
It really doesn't mean anything.
Right. Yeah, absolutely. That's a very good point too. We go based on, I guess, what you can prove on paper, how much
Right.
debt there is.
Right.
Can you really prove how much debt is out there when you've got all these different ways they can obscure their numbers, right? The banks.
And look what they're talking about. Oh, they have to be really creative with their financing and create this money to pay for all of this stuff. But what does that do to you and me?
Right.
And our work efforts.
Right. Exactly. Yeah. It's again, they're just squeezing the very last bit of usefulness out of the purchasing power of the dollar in order to fund their own empires. It has nothing to do with
and
you
transfer
and me.
wealth.
Yeah.
They don't care.
Right. Because when this reset happens, Lynette has said it the best. Wealth never disappears. It just changes hands.
Exactly.
And they want to have a big change of hands coming up with this reset. So
I think, though, we should have that wealth change to our hands.
right.
Right. And how do you do that? It's not rocket science. You hold on to your purchasing power.
Yeah.
And also, by the way, and going back to the fees and all of that, the strategy is designed in a big circle so that, like the barterable part of it, it's designed to be used up. But if you don't have any principal to work with, you can't recoup anything. So the rest of it, and actually even that part, is designed to be recouped.
Right. Yeah. Any taxes or fees you have to pay to access that wealth that you might have in the system. You recoup it with the strategy.
Exactly.
Yep.
And it's logical. You'll understand it. So Deb Warner, 2978 asks, Lynette, do you expect any monetary changes after the Genius Act goes into effect on July 18th? Do you think they will introduce digital currency at that time? Well, I think they've kind of already been introducing the digital currency, but I expect a lot of changes because they're building the infrastructure and they're building these guardrails to trap you and keep you trapped inside of the system. This is your escape hatch. It really is that simple, along with making sure you have surety in food, water, energy, security, barterability, wealth preservation. That community piece is arguably the single most important piece that we talk about or that we do, and shelter. You've got to get that done, because that's what enables you. If they say jump, you go, no, because you have your needs met. If you don't meet your needs and they say jump, you're going to have to do anything they tell you to do.
Right.
And if we don't come together in global community and demand redeemable gold back in the system again, you tell me what power or control. Do you think you have any level of control over the government officials today, or the central bankers, or these large corporations? No. Why? Because you're one person. 3% of 8.4 billion? No, we've got some power.
Yeah.
Right? Okie doke. And Robert 4222 asks, Lynette, should I stop contributing to my company's 401k and use that amount to purchase physical precious metals to hold? IRS rules prohibit me from holding precious metals deposited in my 401k. Well, I mean, there are a few things in here, and we do know that what you can hold inside of your 401ks are changing. So a lot of times corporations will match part of your contribution. And okay, what I'm going to tell you is it depends. Personally, I do not make that choice. I had a SEP IRA that I funded, but once we got to a certain point in the trend of the currency's life cycle, so I have a big retirement plan, but I have it privately. I don't have it in what the government created after 1970s, which was really more about controlling you and transferring the risk from the corporations to the individuals. So I can't actually tell you to stop contributing, but I would probably take a look at not contributing more than they're matching. And I'd also need to take a bigger look at what my real options are inside of there, because even if you got to buy gold inside of there or silver, it's probably going to be bullion. Right. So I can't tell you not to. I can tell you that I don't personally, but I do buy precious metals, and that is the way that I fund my retirement. I mean, we need to be more familiar with how you are set up. There might be mechanisms that allow you to access that. Like the administrator would know if you can do an in-service withdrawal, roll over election. I'll repeat that for anybody that's trying to write it down. In-service withdrawal, roll over election. If you have the right to do that, I'm sorry. If you have the right to do that, we probably need to just use the lavaliers. It's probably going to be better next time. But if you have the right to do that, then typically it's either up to 50,000 or 50% of the balance in your 401k, whichever is lower. Now, I'm not reading this anywhere, so yours could be different. I don't want you to take this as gospel. But in that case, you can then transfer up to 50,000 into a traditional IRA. And once you have it in a traditional IRA, you can take a distribution. Yep, you're going to pay your taxes. You're going to pay, depending upon your age, you might pay penalties, what have you, but we can recoup those. Right? If you cannot do that, you might be able to borrow against them at a reasonable level. It's going to vary based on what you do. So just to give a blanket answer is kind of hard because we don't know what we're dealing with. But if you can borrow against it, then you're repaying yourself. So that is another way to do it. If you can't do any of those, make sure you're properly diversified. So the money you have over here, like 403Bs, forget it. There's nothing you can do. As long as you continue to contribute, you are locked in. Now, if you stop working there that's different. But if you're continuing to contribute, the best thing that you can do is properly diversify your portfolio. Those are all intangibles. You need proper tangibles. Probably not as much as you think, because we work with the fundamental value that we know it's going to go to at a minimum. Because to your earlier point, who knows how many derivatives are based upon the debt that they agree to, tell you that there is.
Right.
Right. Even when we were working on, and I don't know which piece, but when we were communicating last night, back and forth, right? Do you remember what that was about?
Yeah, it was for when we were looking at the BIS report, and they had the new number for how much
the derivatives
there are, the OTC over the counter market, but then there's ways that it's called netting, that they can basically they agree upon what they really want to show as their OTC or over the counter number, and
the price for the contracts.
Right. The
Right.
price
That's what that reflects.
Yeah.
When I'm agreeing to sell this and you're agreeing to buy this at this price.
Right.
But nobody knows the true underlying value at risk. Yeah. And that means the BIS, the World Bank, the Federal Reserve. I mean, take your pick, the International Monetary, IMF.
Yeah.
What is that? International Monetary Fund. Oh, boy, I need another vacation.
But yeah, and it really, I guess the easiest way to describe netting would be like, if you have $2, right? So Lynette has $2 and I have $1, and I'm like, hey, Lynette, I'm going to loan you $1, and then you loan me $2. But since I loaned you $1, it's really like you only loaned me $1. They're hiding the other dollar that she just loaned me. That's what it is. It's just, hey, if I owe you $1 million and you owe me 500,000, we really only owe 500,000.
Right. It makes it look a lot smaller.
Yeah.
And I know when I go into the office of the comptroller of the currency to look at the derivatives that there are inside of the FDIC insured banks, this still goes back to everything that we're talking about, because it's leverage, right? What do they say? I think the netting benefit, the last report that I looked at, so there could be one more that just recently came out, but don't hold me to this, it's not right in front of me, but I'm pretty sure I'll be pretty close. 88.4% netting benefit. What does that mean? That means that even if you believe them, the true notional value of those contracts are 88.4% more than what they're showing you.
Right.
They're hiding that risk. That's what they're doing. Yeah. They're hiding that risk. That's exactly what's happening that we were talking about at the beginning of the show with all these mega corporations and all of this. I even did a video. You might want to pull that and put it in there with it. It's not on these mega corps, but it was on, it was on IA and losses, and how really they're just internally funding themselves. What could possibly go wrong? But when it does go wrong, who's going to be holding the bag?
Well, yeah, and again, to your point too, that's what these retirement accounts have become. It's risk transfer. So
100%.
Risk off for the corporations, total risk on for the people that have their life savings inside of these accounts, inside these vehicles.
But you don't know it, do you?
No, you don't know what you don't know.
Yeah, exactly. And these people are playing with other people's money.
Yeah.
They don't care as much. So Nelson L. Veneri from Facebook asks, right now, and I guess he has it underlined, or is that the way it's coming up? Doesn't matter. Right now, silver and gold is lower. What is best to get? 17 ounces of silver or a 1/4 ounce of gold? Canadian dollars. My connection tells me get silver and then convert to gold. Timing. So what he's talking about is that silver gold ratio and that ratio trading. And really, they want us all to be traders, because then when you lose or things screw up, whatever, first of all, you're taking all the risk, and I don't think it's worth the reward. So back to the question, how would you answer that question? How would you answer that question?
Well, I would look at, Nelson, it really comes down to what your personal goal is. Our approach is we want to make sure you have mainly silver for your barterability position. And then for that wealth preservation piece, have your gold. So I would look at it as, well, do you have that barter piece already filled in? I mean, it's never bad to have a little bit more, because it's better to have it and not need
Can't
it.
have too much.
Right. Then need it and not have it. Or is there an opportunity there to build into that wealth preservation position if you haven't already? So I mean, it's funny because the way that that your question is even phrased at the beginning, silver and gold is lower. That's fundamentally impossible, right? There's nothing lower about this. It is what it is. It's metal.
It's true.
But
It's lower in terms of dollars.
Right. The
Really
spot
good point.
contract price,
Contracts.
the
Trading contracts.
right, the perception of what Wall Street wants you to think of the metals is lower. So, I mean, to your point, they want us to be traders. They want us to look at, well, can I get the silver, then hold on to it, and then turn it into gold? Look, that
You can.
Right,
I mean,
yeah.
that is a strategy.
but it ain't our strategy.
No.
Right.
And it all depends on, it all depends really on what you're trying to accomplish.
Right.
Too many people make choices and then they want to build their goals around the choices they've already made. And that doesn't make a whole lot of sense to me.
Right.
It makes a whole lot more sense to say, look, this is what I want to accomplish long term, right? I want to make sure that I can transfer wealth down to my family. I want to make sure that I can I want to make sure that I can, we got to get the lavaliers. This is not working. This is not working. Okay. But we're learning, and at least we're willing to experiment and try stuff, and it's live. So, really, I don't know. I don't remember where I was.
Well, we're talking about how they want us to be traders, and
Oh, yeah. And actually, in my generation, and especially my parents lived through the Depression. So anybody whose parents lived through the Depression, it definitely had an impact on them. And they were more about accumulating wealth, right? They were. So, what is wealth? Well, this is wealth, right? This is wealth. We were taught to accumulate wealth. The younger generation has been taught to accumulate experiences. I think you can have a combination of the two. The problem with only accumulating experiences, which means everything is intangible. If you get into trouble, how many people cannot come up with $400? So that's a difference between wealth and money, right? You can't come up with $400 in case of an emergency. Well, as you guys know, because I've shared this with you in the past, but there were certainly times in my life, thank goodness I accumulated when I could, because I liquidated it and was able to feed us and keep us afloat when I couldn't. It's got to be a combination. So even when you're asking me, should it all be gold? Should it all be silver? It should be however much you have to work with. And if you can diversify in that based upon your goals, then that's what you do.
Right. Yeah.
But
absolutely.
call us. We'll walk you through it. And then you decide. I mean, ultimately, it's always got to be your decision.
Yeah, exactly. We give you all the information that you need to make that informed decision on what's going to be best for you. And so, if it's a short-term hold, long,
So here we're highlighting because he said that it's for a long-term hold. Again, I'm going back to the diversification, but for me personally, if it's a longer term hold, then I'm either executing the growth part of the strategy, or I'm executing the legacy part of the strategy, in which case for me, all of that is gold. It's that first barter piece. That's where the silver comes in for me.
Yeah, because that's designed to be used up as we're going through this currency reset. That barter position's whole purpose is to allow you to maintain your standard of living while the dollar collapses. So you want to make sure you've got it so you can keep food on the table, bills paid, property taxes paid, all that important stuff. Have like emergency fund. But if you're thinking long-term goals, yeah, I would agree. Gold is where you're going to want to put that, because again, we can see what's provable as debt, but I mean, we don't really know how much debt is out there, so we don't really know the fundamental value, how high it can go on that gold.
Right. We're giving you a minimum.
Right.
But, aside from that, because people will also argue that when you look at the fundamental value of silver based on a 20-to-1 ratio, which we may or may not get there again. We got a shot. It's happened.
Right.
But that then they would take their silver and turn it into gold. The problem is, since all of this is physical and there's a finite amount, and it isn't just the exit strategy. I agree with you. Nobody else has the exit strategy. But then again, nobody has the entry strategy either. Right? They just buy gold, buy silver. But there's gold and then there's gold, and there's silver and then there's silver. So what are you trying to accomplish? And I know I've used this a lot. You don't see any pictures behind us yet. And that's because I haven't used my shoe. Actually, Jacqueline would probably kill me if I did that here. But I have used my shoe to hammer in a nail to hang a picture.
Yeah.
Right? I have. It works. It works.
It does work.
However, when I have a hammer, it goes faster, it's cleaner, and it's just much better. So for me, it's all about functionality.
Right.
And it's all about what is the best tool for this job. I can do it with a shoe, but I'd rather have a hammer. You can do it with silver. You can do everything with silver. But gold, you can carry a lot more wealth in a smaller package. And so for executing the strategy, it is, what do you need to position into to support all of the goals on your list?
Yeah.
Right?
Absolutely.
And there's gold, and then there's gold, and there's silver, and then there's silver. And we don't worry about that ratio because we do have an exit strategy.
Exactly.
But that's like exiting into wealth that you can't outlive, that supports your retirement needs for as long as you live. And I don't know, what a concept. It's something that I get to pass down, and you get to pass down to the future generations. So now they've got additional income that they can't outlive. And the beauty part about the strategy is where wealth is the asset.
Yeah.
Right? But we still need that day-to-day money for barterability. So in the big part and the growth part of the strategy, we take both of those into account.
Right.
And the wealth can then create the cash that you need to pay your bills, and you can't outlive it. What a concept. And it's not rocket science.
No, really not. I mean, I know a lot of work has gone into the strategy, but
I put a lot of years into that, a lot.
But the core fundamental of it is, right, it's not rocket science. We're just looking at what is the repeatable, predictable pattern that thousands of currencies have gone through in the past, and what is the smartest money in the room doing. So.
Voila. Yep. And Jules F6042, love you, Lynette. Thank you so much. And Zang Gang, hey, your hair looks fantastic. Oh, God. What do you think is happening? Oh, what is happening with your hair? Well, I've been letting it grow, but I don't know that I'm going to cut it because I get too much of this. Yeah, she's making a face over there. Thank you very much. This is really the longest my hair has been in, like, so long. I'm just going to trim it, though. So you let me know when you don't like it anymore. You let me know. But what do you think is happening in the gold silver markets in the last week or so with the dropping? Thank you. Have you noticed all the level of volatility in these markets, right? There's a tremendous amount. So part of it is margin calls because those stocks were bought with debt. And so as long as the markets keep going, and we're in melt up phase. So as long as the markets keep going up, then those entities borrow even more money against their holdings. But when they revert down, so the volatility, they go up and they go down, then all of a sudden they have to come up with money. And that's where the gold and silver contracts work. And in fact, you can call anybody. I've used it before. I have it. If you want it, I'll give it to you. But in 2008, what did we see? We saw the same kind of behavior. So we saw the spot markets drop pretty precipitously. We saw the gold and silver miners stock drop. But we saw the collectible coins, which we don't have one here. We saw the collectible coins make this trend high. Why? Because the bullion market it straddles two worlds, right? So it's going to flow because we're still transitioning with the spot gold contracts that entities are trading back and forth. So I really do want you to understand. I know how much fun it is. And Kenneth can tell you, because I came out and said this to everybody when gold and silver started running.
Yeah.
Do you remember what I said? I said, I know this is fun. And I remember this because and I know I told you guys this too. I know this is fun. It feels really good when you see the spot market go up and up and up, especially when you get these big corrections in there, right? But that is trading. So you had all of this speculative money that flew into these contracts. But there are 33 different global physical users of physical gold and 36 different, and probably more than that, those were just the ones I could come up with, of physical silver. These guys did not evaporate regardless of what the spot contracts are doing. So if I had one wish in this world that a genie came out and said I would, well, now, I can't say that because it would be sound money back in the system again. But aside from that, okay, if a genie came down and said, what do you really want, Lynette? I would so love it if people would understand that when they're looking at Bloomberg or CNBC or picking up the newspaper or looking at any of that, that is a trading contract. It does not reflect the true fundamental value of an ounce of gold and an ounce of silver. But it does speak to the confidence that yet remains in the public to the markets. Right. That's going away. And you brought up earlier about that loss of confidence. Yeah. That's just the faster inflation happens, the more obvious it is to the 99% of us that are not up in that rarefied air. Well, that's when that happens, right? And so you got to understand that a government suppresses and manipulates the price of gold, particularly because gold is the primary currency metal. And a rising gold price is an indication of a failing currency. And once you have fully integrated it, and you probably can even remember that aha moment when it finally made sense to you, right? When you get that aha moment and you realize the truth, like, the rose-colored glasses are out. This has no value. It has no value. You start to make different choices. So it is that simple.
And I would say too, part of that as well is that the when we're talking about, like you said, the perception management piece of it as well. Mm-hmm. I think I did that video on Basel III, how if banks can now swap their cash for bullion gold, right? So again, a financial asset, it changes nothing on their risk-weighted asset balance sheet, meaning it can be like an invisible swap to the public's eye. They don't have to tell anybody, hey, we swapped cash for gold, and it doesn't change anything on that balance sheet. So I look at this as also possibly because, I mean, these big institutional banks have manipulated the spot contract price before in the
Their
past.
job.
Right. It's their job to do that.
Oh, don't do that again.
But
denying it for a gazillion years before they go, don't do that again.
right, exactly. So if they have an incentive to have these contract prices maybe go down, it's for two reasons, in my opinion. Reason one is now they can accumulate more of the physical asset, the
Cheaper.
yeah, right, for less. So they're swapping their dollars, they're getting more of the physical gold, and that goes into also, again, nationalization. Why would a bank want to be holding a bunch of financial asset if they aren't hoping for a good payout from a government that's about to nationalize it? But aside from the second reason why is to shake out the consumer, to have people
The
looking
retail
at it.
public,
Right.
us.
The retail public, to have us looking at the manipulated spot contract price, which is nothing more than a futures trading price, right?
Mhm.
And to say, well, I don't want to touch that.
Right.
Yeah.
Oh, it's going down. Why would I want that? But at the same time, and I've shown you that I've been, thank you. Thank you.
I got you.
All right. You get me, I'll get you. But, it's also, I think it's so interesting if you go in and look at the gold and the silver that's held in the COMEX for delivery.
Uh-huh.
Even as the spot prices come down, so has the availability of the
Right.
gold and silver for delivery. And could this not also be hiding what's really happening? Because in the US, it's mostly contract trading, but somebody's taking delivery.
Right. Yeah, absolutely. Yeah, they are. And it's actually also interesting too with how they changed the rules back in February. Don't quote me on that. Maybe it was March, where if a company wants to take physical delivery from COMEX, they have the right to review that request and say, if it's not going to suit some sort of industrial need, they could say, sorry, you're just going to have to settle it in cash or roll it to a different position. So, I mean, the capital controls are
in
like,
place.
in place.
Mhm.
Says
You
a
just
lot.
don't realize it.
Right, because it says a lot about where we're at in the currency's life cycle. I really think when these mega IPOs go live on the stock market, it's just going to change.
Right up.
Yeah, it's going to change a lot. And I think there's going to be I guess you'll see on Thursday in the video when it drops, but it's just a final shotgun blast of liquidity that they want to secure their own empires, because that's their strategy. It's not a sound money strategy. It's a strategy where they offload the risk to us.
That's it.
You, us, here, everyone that's just a average everyday person living their life. They have offloaded that risk. That's how their exit strategy is put in place. Our sound money strategy is a strategy that you can put in place to not have to play that game. As you said,
Yeah, absolutely.
yeah, if they say jump, no thanks.
That's it.
Yeah.
That's it.
Yep.
And what are we doing, right? They're building their community with all that circular, but we're building it too.
Yeah.
And we are more powerful. We are more powerful than we realize, or that we give ourselves credit for. I mean, I'd have to pull that up. There was a quote from Winnie the Pooh, which I know sounds funny, but I gave one to all of my grandchildren because I loved it so much. And it was something about, and maybe you can pull it up. It's Winnie the Pooh, and it says something like, "You're braver than you think. You're whatever more." Do you know which one it is?
I don't know it verbatim, but I know what you're talking about. Yeah.
Oh, here we go. Okay, here we go. Wait. Let's see. And and it's framed. Oh, probably which one? Well,
towards the top.
it's the whole poem.
Oh, I see.
It's the whole poem.
Mm-hmm.
It's not just that little part. There we go. No, it's the whole poem. Well, did you put?
We can always maybe pull it and get it back. Yeah.
Okay, where's the? Oh, we're wasting too much time. I mean, it's just a very nice quote.
Yeah.
But essentially, we're smarter than we realize. We're braver than we think we are, and we're stronger and more powerful. That goes into the community piece. It really does. It really does.
Yeah.
So, and Nathan Patel, 1786 asks, I have taken everything out from my 401k into a Roth IRA, which means he paid his taxes. I also have a Fidelity brokerage account. I don't have any traditional IRAs. Am I still vulnerable? 100%, because it's still in the system. So you have a bit more flexibility because you're in a Roth IRA, which means, by the way, that you already paid your taxes. So the advantage of the Roth is that the presumption is that they can inflate the value of your assets inside of there, and then you can take possession, and it's not a taxable event, right? I mean, it is a genius system. Come on. They create the inflation, and then they get to tax that inflation. I mean, come on. How many times can you be taxed? A gazillion until you have nothing left. And that's the problem. And that's what all of this is. That's what inflation, that's what all of this is. It's taxing you and inflating away your wealth till you have absolutely nothing. So yeah, you are still vulnerable, and call us and we'll help you become no longer vulnerable. And so much of that is about, you've got to do what you're comfortable with. If you're comfortable in the stock market or you're comfortable with cryptocurrency, do it. Just to make sure that you are properly diversified. That's all. And then, what if I'm right? What if I'm wrong? It really doesn't matter. And so, yeah, that's really, just make sure it doesn't matter. But yeah, if everything you have is intangible, you're vulnerable. And Colleen Allen, 3382. Lynette, I got a second checking account as you suggested. Good job. I'm wondering if it would be a good idea to try to raise my limits on my ATM withdrawals. I'm thinking it might be helpful in the future. So I think what you might be thinking about is that if they were to do a bail-in, you would limit the access to, really, nope. Too bad, so sad. You have no access to your accounts. And they can do it with everything. Though when they tested that in Cyprus, they discovered that the whole world is dependent upon that deposit insurance, which is a joke. But anyway, the deposit insurance. So they went above the deposit insurance and allowed in their accounts to maintain 100,000 euros. The problem is they didn't have access to all 100,000 euros. They just had like a certain limited amount. So I don't think it's horrible to raise your limits on your ATM, but if they were to do a bail-in, it's not really going to matter. And also, they can stop you, right? They can stop you from accessing that, the fiat money that's in there whenever they want to, and you have no recourse because banks have what's called safe harbor. And a lot of the experimentation that's been going on, they all have safe harbor. You and I don't have safe harbor, but the big corporations have safe harbor. So our strategy includes a certain level of cash outside of the banking system, because they don't have to give you your money back, and there's nothing you can do about it. And you can yell and scream, and you can bang on the doors, you can do anything you want, and you have no access. So, do yourself a favor, create that local community around you, but call us and we can have that conversation to determine, well, how much cash do you need outside of the banking system? Although the cash in the banking system, they may, I don't know, we'll see, but they still may let auto withdrawals go.
Right.
Things like that for property taxes, things like that. So you want to be prepared, though.
Yeah.
And at Spain. Did you want to add anything to that?
No, I mean, everything that you touched on with how that money works inside of the traditional banking system goes, I was thinking about it as you're talking, the words that just popped up in my head were capital incarceration.
Yeah, totally.
They created banking holidays, right, in the 30s because why? They didn't want anybody to have any access to their money while they were doing what they had to do with it. But so it is very, very true. I mean, right. It doesn't matter if you raise your ATM withdrawal limit if you can't access that cash anyway. So that layer, that's like kind of that first layer is cash outside the banking system is what you want to layer on top for your barter strategy. And then the silver kind of comes into play after that, after you've taken through that cash. So yeah, I was thinking about that though. Capital incarceration, it just like flashes in my head.
Yeah. You know what? And I think that is so true. Because, and it's almost wealth incarceration, right? Because we don't realize it. We think that's our money in the bank.
Yeah.
No. And we think we can access it whenever we want to. No. Okie doke. And Cuspain from Instagram says, do you buy only in the dips, Lynette? Nope. I just keep stacking. And I'll tell you why. Because I'm really crystal clear on the fundamental value of an ounce of gold and an ounce of silver. Although I have tons and tons of silver, but I'm really clear on how much this really is worth. So I don't care where the current price is at all, because I know it's a flipping bargain. You want to accumulate it as you can, because the other thing that I've learned, and remember, I've been in these markets since the 80s. That's a very long time. Okay. And so have a strategy. I am not a short-term trader. That takes a certain level of a certain mentality level and a huge commitment in time, because you got to watch it constantly. You can't just let it go. And I am a technician, at least I consider myself a technician. And so when I'm showing you these really long patterns, all you have to do is shorten them up. So you can do it. You recognize the patterns, you can do it. The question is it worth it? And what am I trading? I'm trading this crap. That's what I'm trading. And I know it has no value. I'm clear on that. So no, I just keep accumulating. Period. End of discussion. Because I also know that at some point I'm not going to be able to, and I don't know what that point is. And okay, Square 7944. What are your thoughts on I Trust Capital putting retirement accounts, 401ks, etc., on the blockchain via their services? Can you look into that? Yes, I can totally look into that. Would you grab that for me, please?
That's Northern Trust too.
Yeah, Northern Trust. Well, they're all going to do it, and they're tokenizing all of the deposits, which is why they need all this money, because it's very expensive to create those tokens. They don't exist other than in cyberspace, right?
Right. Yeah.
Why is it so expensive? Do you know why?
Well, I can say because one thing is they need to be able to have at least a one-to-one backing of some sort of debt instrument, whether it's a short-term treasury or cash or a repo agreement on the books. And the language there is important. It says at least a one-to-one backing, which shows me that it could be a 10-to-1, it could be 100-to-1 backing. So yeah, it just requires a lot of new debt entering the system for these tokens and the blockchain to really function as they've kind of put out as a stipulation how it needs to work.
Yep. But I will look into this. And, the good about blockchain, and the good and the bad, right? Because everything is good and bad. But the good about it is if you can really absolutely trust it, then you can have an ownership string. So those big, thick mortgage documents that you sign, maybe you don't need them. Okay. Right. And the title agencies and all of that. I wonder how that's going to impact all of those guys. But the bad of it is that I don't understand the code. So, look, they were able to lie to us and fool us when we were on really a very simple standard.
Yeah.
And it is that simple because it's a commodity
Right.
and it's used in all of those different industries. So it's pretty simple. It's just supply and demand.
Yeah.
And you know what? Can I see that question? Yeah, that one. So I will look at that. And we'll talk more about the blockchain.
Yeah.
Yes, I will. And by the way, since I'm going to be looking at that, this was that silver? It was Texas Stacker. Was it Texas Stacker? West Texas. Okay. So Texas Stacker. That's hard to say. West Texas Stacker. I did do a piece. We recorded it earlier today. I'm not sure quite when it's coming out, but I answered your questions and thank you for that. And thank you for all of this because, I mean, everybody's paying attention, but still bringing things like this to help us look, it just helps us see we're a community.
Yeah.
So, okay, ready for the next question. Oh, okay, there it is. Robert Vaughn 8021. My wife has several IRAs. Want to buy gold with one account at least. What do you think? Well, I would say so. Yeah, that makes sense. I mean, we do gold IRAs. Most people do it inside of an IRA when they do it because they don't want to pay the taxable event. And you do whatever you're comfortable with because some gold is better than no gold, regardless of what that taxable event is. Because if the US dollar, if this stuff does the same thing that this stuff did, that's 100% of your principal. And if you don't have any principal at all to work with, how can you rebuild? You can't. So yes, I do think that is a good idea to do it with at least one account, or maybe even paying your penalties and doing it outside of an IRA. But you do whatever you're comfortable with, and we can help you with any of it. That's what we really try and do, is meet you where you're at and help you get to where you want to go. And a lot of times in a couple circumstance, one believes in it, the other one doesn't. Yeah. So it's a function of education and maybe some compromise in there as that education is happening. You want to comment on it or?
Yeah, I mean, no, just like you said, everybody has to do what's going to make sense to them. I think that deferred tax is just such a, I don't know, it's a funny concept because
yeah, it is.
It is because okay, if you open up your 401k right now, if you have a 401k and you see $500,000 in there, you truly believe you have $500,000, but the moment you go to do something with that $500,000, the government's got their embedded claim on it. So really, you've got to account for 30 to 40% of that anyway belong to the government. And
well, I mean, there are actually a lot of things that are happening with that because all of these retirement plans are visible to the government.
Right.
So they can look and see and determine, well, how much tax do we need? And they can change that structure anytime they want.
Exactly.
And they can take a page out of other countries like Poland's retirement plans where they did, don't hold me to this, but I'm pretty sure they did a 40%, but they positioned it as if it was a one-off event. And you watch, mark my words on this. If they do something, because they've talked about doing that here, that I've read, it could be different than this, but that I've read, they talked about an 11.6 one-off. They're only going to do it once, because if you believe that they're only going to do it once, then you don't change your behavior. So it's very important that you believe that even though this was awful, it's not going to happen again. I should take a look. I don't know what the savings rate was in Poland after they did that 40% sweep of the retirement plans. But you understand, it's just your perception that you own anything. It is just your perception that you have a control over everything. It's not the truth. If you don't hold it, you don't own it. And your perception means absolutely nothing in a court of law.
Yeah, right. And exactly like you said, that rate of taxation is like it's like a
They can
variable.
change it.
It's a variable rate mortgage on your life's work, on your entire what you're banking on being able to live the rest of your years with, right? After your working years. That's a variable rate mortgage that a desperate government can set at the drop of a hat. So,
You know, you probably, I don't know if you realize this or not. It's just I'm a lot older than you,
no.
but they created IRAs in the 70s. And that was actually about the shift from corporate responsibility with defined benefit plans. That puts the onus on the corporations to a defined contribution, which actually puts the onus on the population, and it eliminates the corporate risk. So that stuff is a risk transfer mechanism.
Yeah.
You know, and 401ks came out in the 80s. These are not long-term solutions. This is, to your earlier point, this is about risk transfer.
Yeah.
So I have a retirement plan, but nobody else is holding it, and nobody else is dictating that all I can buy are stocks or bonds or, private credit and private debt.
Right. Again, as these IPOs, these mega IPOs hit the market, that's exactly what it is. They're just a giant sponge that's going to suck up whatever you have in your retirement account because you're fueling them positioning their legacies. But you're right. This retirement account, it's outside that system. And I can't say it enough how really it is our sound money strategy.
And this next question, right? Space Dog 879. Why are the metals falling so much? So because that's real. The metals aren't.
Right.
It's the contracts
I
that
guess
are
if
falling.
I go like this, it's falling. But that's only falling that I can see it doing. Right.
Right. But again, it goes back to what's happening in the markets, right? One day it's great. The next day it sucks. So the markets go boom and then they go bust. And when they go boom, I'm telling you, these traders are about building on that. So they goes up, they buy more, they take more. They take on more debt to buy more equity. Then it goes down. Now they got to come up with money. They're going to sell what actually the market will buy. And those are those spot contracts. Also, so that's one of them because they pushed it up. I mean, I think silver was something like 80 or 90% above that 200-day moving average. And gold was something like, I don't remember, 45 or 50% above. 10% above is a lot. So what's 40 to 50%? What's 80 to 90%? Right? I mean, that's beyond extreme, just like all these other valuations. But that's the valuation of the contract, not the physical metal. And that's my wish. If I could have a wish, I would really want people to really take that difference to heart, because that's what helps you sleep at night. I don't care what the spot market's doing. I only care because you care. But if you didn't care about it, I wouldn't watch it because it doesn't matter to me, because it's just like, it's like anything else that is not real. It is fiction. So the spot market is falling because it was a risk trade, just like everything else in these markets. It is a trading market. But the 36 users of physical silver and the 33 users of physical gold, do you think they evaporated? And when you see the spot markets behaving like that, at the same time that you look at the availability for delivery and that's going down, that's really telling you something completely different, because there are those that are in the know, which are the ones that'll buy a 500-ounce contract, right? And say, deliver it. Well, I don't even know how much a delivery on 500 ounces would be. Can you do the math? real fast on 500 times, just put in 4,300. That's close enough. Okay, so that's $2,150,000. Can the normal person next door do something like that? No. So you have to, goes back to my father, and I know this always makes him sound less than, but you guys have been watching me for a while. No, I think he was the greatest man on the planet that ever lived. And he would always say to me, do what I say and not what I do. It's mostly around driving. Right? Because he was horrible. He never looked in the rear view mirror. He'd get a new car, and that same day, his bumper.
Oh my gosh.
Oh, yeah, he was bad. But I would say to him, Daddy, that makes no sense to me. And I didn't realize that what that was really doing was training me. So I listen to what the central bankers say. I read what they write, but then I watch what they do. And when their actions are not congruent with their words, I know it's a lie. So when I'm looking at the volatility in the spot market, but at the same time, I'm watching global central banks accumulate more gold than they ever have historically, and I'm watching the other private corporations, some private corporation, some private entity, big kahuna, is taking delivery. They're taking advantage of this. But that's what shows you that the spot markets are a lie. How many times can you be lied to when you do not know the truth? And our show is about helping you know the truth so that, I don't know, what a concept. You get to make educated choices that puts your best interest first. This is not rocket science. And Petro Manana from Instagram, if the USA do a gold revaluation, doesn't that require a full real audit to Fort Knox? If the world demands it. If the world doesn't demand it, then no.
Right. No.
I hope they do. Right. And maybe it's there. Maybe it's not. We sure heard a lot about the audit until we heard nothing.
Yeah.
Crickets. Right. Why did it do crickets? So I hope you're right, because I would like some honesty in here. But I will tell you that if they do a full audit, and we're already, our status is the world reserve currency, that's been over a long time ago, even though people don't realize it. So we still kind of have the name. But remember, when we're looking at the gold revaluation account, every single central banker has one. Why? Because they know they always destroy the currency. And then when they try to get the confidence back, that's when you get that overnight revaluation.
Right.
That's when you start to see gold actually go, and silver as well, actually go to their true fundamental value. You'll see it go up and down and all of that on the spot market, but that is not real. That is not real. That is trading. That's all that is. And again, and you don't have to agree with me. And if you don't agree with me for whatever reason, or if you think that my answer, you didn't understand it or whatever, or Kenneth as well, let us know. That doesn't insult us. We're part of the community, right. And we actually really want you to know and understand what we're trying to show you. You formulate your own opinion after that, and we'll support your right to do so. So the optimistic beekeeper asks, hi, Lynette and Kenneth, please could you explain the difference between defined benefit plans and defined contribution plans? So a defined benefit tells you, like, if I were, we'll just role play here a little bit. I'm a large corporation like IBM, let's say that, right? And this is prior to the 70s, and Kenneth is an employee. So I want to attract him and I want to keep him there, because back in those days, when it was defined benefit, people worked at the same place for 30 or 40 years. They worked there their whole career. So corporations wanted individuals to be loyal to them. So a defined benefit, when I hired you based upon your salary, when you, after a certain period of time, 20 years, 30 years, whatever that happens to be, this is how much you're going to get for the rest of your life in benefit. Now, it still doesn't keep pace with inflation, but the benefit was defined. So what that means is then that the corporations had to go out into the market so that they could earn the money to pay that benefit. If the stock market went south, if they had any other problems, they still were obligated to pay that benefit. So that's why I say the corporations were taking all the risk, and they didn't want to do that because corporations want more money.
Right.
So defined contribution was, okay, Kenneth, how much every week or whenever you get your paycheck, how much are you going to put into the 401k plan? You don't know what that benefit's going to be at the end of 20 or 30 years. Maybe you'll be rich, maybe you'll be poor,
Right.
but it's the contribution. So I want to inspire you to do it. So at first, then the corporations would go, so we'll match 50%, 100%, whatever amount they're going to match, which would inspire you to make a larger contribution.
Right.
But you have no idea what that benefit's going to be. And because more people did not invest into their 401k, which of course, where's all that money go? Goes into the markets, right? All those fees. I did pieces on how much you're feed with that, and you don't even see it. But anyway, that's a constant cash cow for Wall Street.
Oh, yeah.
But the defined benefit, maybe they'll be there when you get done, maybe not. However, not enough people were actually participating and contributing. So then, because they found out that if the employee had to opt in other words, say, yep, I want to do it, most of them didn't. So now they changed the rules and automatically you are enrolled.
You have to opt out.
Mm-hmm. So they have a lot more people that are contributing to Wall Street.
Yeah, and I actually would say too, even the employee matching has changed dramatically too, from its original allure to like, hey, we could match up to 50%, 100%. A lot of companies that just don't even do matching anymore.
Mm-hmm.
They're just like, well, it's okay. You want your retirement? Okay, go ahead and put the money in. We're not going to do that. So, and to your point too.
Yeah, I mean, it changes.
Yeah, it changes. And to your point, it's all a means of Wall Street to have more funding, more moolah to play
more
with.
fees.
Yeah, more fees,
right?
More to get you with. Yeah, and then you've got your hedge funds that charge you to just let your account sit there and still be essentially used as fuel for their needs. So if you think about that, you're paying to have what you perceive as your money sitting in an account where these retirement companies are using it. They're using it to go make their own money on their own risky bets using the money that you've put in there, and they're charging you for it. I don't want to, it's not ethical, but it's ingenious in a way.
System.
Yeah.
Look, I can't say that the whole system isn't absolutely genius, and you have to respect that, but it's also extraordinarily abusive, and that I don't respect.
Right.
And that is not okay with me.
Right.
And I don't know how these people consider that they have the right to abuse all of us. But anyway, so I hope that explained it. Defined benefit, you know what your benefit is going to be for the rest of your life. Defined contribution, you put the money in, and whatever you have at the end of it is what you have to work with.
Yep.
That's the difference. And Wolf 728 asks, Lynette, is it conceivable that the use of physical gold and silver could be illegal if we go to the CBDCs? Well, even when silver and gold, actually, they both were kind of confiscated in 33. Silver, not as much because it was still the money.
Right.
But so It is definitely conceivable, except even when gold was indeed confiscated from the public, I mean, they have never been able to duplicate in any laboratory, though they've tried for thousands of years, the properties and qualities of silver and gold. So there are always exceptions to every rule. And that's my point. Yeah, it's absolutely conceivable that if you want to use gold and silver as money, that we can't do it. That's why becoming part of Citizens for Sound Money and working with your local legislature to get the taxes removed from gold and silver, that's a step. We have so much work to do. And I'll just kind of throw in here the second Monday of every month at 6 p.m. Eastern time. So we'll change with the time change. You guys don't have to worry about it. We have the Sound Money Hour. So where we're learning, and I have some homework before the next one, but we can get it done. But, that's why getting gold and silver legalized back into the system is so important. And if we can get enough states to do it, that can put pressure on the federal government. And if we come together globally and we demand redeemable gold in the global monetary system, that's the tippy top. That I can't even tell you I would die a happy woman, because we will have accomplished something so great. We will have accomplished that. No one person can do it. So wait, don't go too fast, because sometimes I need to refer, because sometimes I kind of lose a little bit my train of thought, and I want to make sure that I answer all the questions. So while that is conceivable, there will always more than likely be exceptions to the rules because of how critical silver is in the rest of the economy and gold is in the rest of the economy. That also takes me to why I personally don't buy bullion, because of my Uncle Al. And for those that haven't heard this story, and for those that have, I'm sorry for the redundancy, but you hear me say that I was groomed for this moment in time. And this is one of the things. And I will tell you this, I always believed in destiny, but now I believe in fate, just because I've lived long enough to see that. Like, I had no choice. But I was groomed for this moment in time. And one of that was being born into that family where I had my Uncle Al, who was a major antique dealer. And he was my favorite uncle. I was his favorite niece. And he taught me how tangible assets move from undervaluation to fair valuation to overvaluation to fair valuation to undervaluation. They don't go away because they're physical, but they will change in popularity depending upon where you are in the trend cycle. Well, this was 1964 and I was born in 54. So I was 10 when this happened. And my parents and I were at his house. And he goes, "Come here, I want to show you something." And he took us in a back bedroom where he had 2 tall floor safes. And he opened the door of those floor safes and he said, "If anything should happen to me, Aunt Bertie is well taken care of for the rest of her life because of what's in these safes." So naturally, I turned around to look, and I can tell you, knowing what I know now, he had a minimum of 3 monster boxes in each one of those safes, which means that at the minimum, because you couldn't fit even 1 more ounce in there, that's how packed these safes were. So at the minimum, he was sitting on 3,000 ounces. That's a very big deal, because at that point in time, it was illegal to hold more than 5 ounces of gold in any other way than the pre-33 coins. Now, I'm executing a strategy. And that means that I need and want the kind of gold that is legal to use no matter what.
Right.
Well, that means I got to go to a different classification, because here he was sitting on at least 3,000 ounces of gold when it was illegal to hold more than 5. But it was the kind of gold, excuse me, it was the kind of gold that he could utilize
Right.
That's what I want for us. That's what the whole strategy, really, a lot of it is about, holding the kind of gold. What if I'm right? What if I'm wrong? How about it not mattering? How about just making sure that that you are absolutely holding your purchasing power intact? And now let's think about this for a minute. Let's say that history, I mean, there's lots of history, not just in the US, but let's just say that history repeats itself and they do, like Wolf is asking, confiscate gold. Well, when they're doing that, they're setting up for that revaluation. And that confiscation always takes place before it. And that's the ultimate and final wealth transfer mechanism. And that is when gold goes to its fundamental value. But presuming for a moment that it was confiscated, and the only way for you to hold gold or silver is in form other than, that's where the collectibles come in. I can't put this fork in my 401k or in my IRA. I can't put a collectible coin in there. Yay! Because what that tells me is it's a different category. And since I am 100% clear on the true fundamental value of an ounce of gold, I mean, I've done the research. I've studied this since 87. 100%. Yep. I'm married to it. I'm not going to lie. You know, we've done the same thing over 4,800 times. I don't think this time is different. I don't think we're going to get a different result. But now I'm sitting with the only gold that is legal to own and use in the normal marketplace. What do you think that does to the premiums on that gold? Now, the normal person may or may not recognize it or understand it, but the wealthy know it. They 100% know it. Now, the premiums, I mean, you look at the charts on the way that the coins in the areas that we like to work in most, right? 89, they hit this all-time high. Guess what? I think they'll surpass that. But I don't even really care. And the reason why I don't really care so much about that is because that means you're still putting value in this crap. I'm not going to convert it. If gold got to $40,000 today, do you think I would sell my holdings? Only if I was converting them into an income producing asset that dropped and became a bargain. And then it's boom, boom. You're not, when it goes to its fundamental value, I guarantee you're not going to want to convert into it unless it's to execute the next part of the strategy. Because at that point, everybody is aware that the dollar has no value at all in this country, but wherever you are in the world, it doesn't matter. They have different names. It's all the same thing. It's all this crap or this crap. Or that crap.
Venezuela one.
Yeah. Or that crap. I mean, so yeah, that is absolutely conceivable. And that's why you want the kind of gold that you can use no matter what. And that's the kind of gold that puts you in a position. What if I'm right? What if I'm wrong? That's also the kind of gold that it is what happens in the spot market, quite honestly, is irrelevant. Right. It's irrelevant because the bullion works in two markets, the paper market, the physical market. And so in China, in other countries in the East, they're paying huge premiums above that contract spot price. And that's the piece that's shifting. That's already in process. It started a year ago in January. So that's already in process. These things take time. They don't happen quickly. Right. But I want the kind of gold that it doesn't matter if they make it illegal.
Yeah, to really kind of touch on that too, because I think it's a very important aspect of our strategy. Like you said, I mean, kind of like a core foundation of it. It's, look, if you've got a pretty shiny metal, but you can't do anything with it, then you've got a pretty shiny metal. I mean, it could help hold down some paper, right, if it needs to, but...
And you can use it in the black market.
Yeah.
I guarantee you, black markets emerge during these periods of time, but you're not going to get full value for it at that point either because of all the risk.
Yeah. And so, yeah, if
Right?
that were to even be the case of that, that's a completely separate thing that, right, you're then going and doing your own strategy, having your own, you want to talk about risk transfer, try doing a gold black market. That's like the ultimate risk transfer. I would not want to do that personally with a 10-foot pole, but we look at how can we have a functional asset that it's got a design purpose, and that is to turn into an income producing asset. And, yes,
Build
leave some as a legacy that you don't have to ever touch because you've got your income producing assets, but you can leave it to your heirs if you wish. The way I really look at it kind of, and maybe this might help bring it into perspective for some of the people listening, is the White House, right? It's a house. The president lives there.
And it's white.
And it is white. So I think that's how it gets its name. But is it the same as the kind of house that maybe you or I might live in?
No.
No, right? Because
No?
because it's got a special plaque on the front of it that says it's a historical landmark.
Oh, oops.
But yours
house
has
does.
it. Yes, exactly. Yours does have
It's
that.
not nearly as big as the White House.
Right. But you see, that's what's great about your house. It's not like the other house that's,
That's true.
right, just a piece of real estate. It's a historical landmark that falls under a completely different category. So if the government wants to go build a highway through somebody's neighborhood, i.e., nationalize the gold, right? That's building the highway. Well, yeah, they'll build it through the regular residential areas all the time, and they'll make you feel like, hey, we're gonna pay you for it. Don't worry, you'll get your due, your money that's due to you. They're not gonna knock down the White House. They're not gonna knock down well, I mean, okay, they're renovating, and there's not a highway going through there.
Okay,
I think
that's
there's a
true.
bunker or something going in there, but
Probably already is.
right. but the point is, it looks like on the surface it's the same, right? It's got rooms, it's got a kitchen, it's got everything, but it functions completely differently because of how it is categorized. That's literally the easiest way I can explain the strategy. Look, it's gold. It looks like gold. It feels like gold, but it is not categorized the same
as
monetary
Yes,
asset.
yes.
Completely different,
Right.
completely different category. And so, do you want to be living in your, cookie cutter, main builder home, or do you want to be living in the White House?
Well,
Right.
but here's the thing. If you're in that regular house and they want to build the highway, they're taking the house.
Yeah, they're taking the house.
So that's really what you're talking about. That's really what you're talking about. And I'll tell you something else, just because you brought up the historic homes. My property taxes, because that is designated as a historical property, are half of what they would be.
Yeah.
So that's something else just to kind of, but a good point.
Yeah, absolutely. It's a completely different code, completely
different beast.
So-
It's still a house.
Yeah.
That's a great way to explain it.
Yeah.
I like that. And at Jeff account, my wife likes your hanging crystal behind Kenneth. Yes. Is that from Uncle Al? And where can I get one? Actually, that is not from Uncle Al, although he certainly trained me how to find it. And I don't know if they have newer versions of that, but that is Murano glass, so it's Italian, and that's from the 50s, because in our new offices, which I hope a lot of you get to see one of these days, and we get to actually do an event soon. We're working on it. But we're kind of, that is part of the flavor of the office, because this building was built in the 60s. So that's floor to ceiling windows. How much do you love your office?
Oh yeah, it's amazing. I mean, they're everything's still coming together, right?
You
But
have to move your desk.
my desk is in the middle of the office, and she said, "You're such a boy," because I put it in the middle. I was like, "Well, it looks good to me. What do I know?"
We're on the 9th floor. Anybody that's been here knows the views are spectacular. It really is one of the reasons why we chose this location, but his back is to the view. All
I
right.
didn't
Well,
think it was a problem. But yeah, no, I really like that lamp. It's really cool.
thank
Yeah.
you. So I don't know. It's Venetian glass, and I mean, you can find it. It wasn't even really particularly. I thought it was a great deal. I didn't think it was very expensive, but I loved it too. So thank you so much. Another question, or is that it?
That's the new one right there.
Okay. And at Robot Toaster, question: what is your opinion on less conventional metals as an investment? I need the rest of it, honey. There we go. Such as platinum, palladium, osmium, and copper. Well, really, gold and silver are the primary and secondary currency metals. So that is my personal biggest focus. However, here it is. However, I started being able to buy stuff from copper. This happened to be what I walked into this space when they were doing some wiring, and this was some scrap copper that was on the ground. And that's what I used to do. When I was 13, 12, 10, 13, I would go down to my father's job sites and I would gather up, because he was a developer, so he's putting a copper wiring in houses. And I would gather up the scrap copper. At night, I would whittle off this plastic, take the plastic off, and then my Uncle Al, I would take it to him because he was a junk dealer. And I would swap it. He would buy it from me by weight. And then I would go to my Uncle Ali. No, it's the opposite. I'm sorry, forgive me. Uncle Ali was the junk dealer. Uncle Al was the antique dealer. So I would sell the copper to Uncle Ali and then take it to Uncle Al, and I would buy stuff. So I don't think I have. I had some stuff that I got from Uncle Al in the other studio, not in this studio, but when we put the other studios together, I'll probably bring more of that over here.
Yeah.
Okay. Okay. So I do like, I've owned some platinum coins in the past. I haven't done anything personally with palladium, osmium, and I certainly own a little bit of copper. And I think this is maybe an opportunity because, like silver, you can go to the bank, and I would suggest everybody do this, right? Go to the bank, get a bunch of rolls of pennies at night, sit there, go through them. If it was minted prior to 1982, pretty sure they were 95% copper, and accumulate them, and you can sell that by weight. I think anything is okay. For me, though, because I am 100% crystal clear that this is a currency life cycle issue, that's why I focus on the currency metals. Right. Primarily gold, secondarily silver. Everything has a different function. So that's why we define what you're trying to accomplish. Then we choose what's going to support that.
Yeah. And to kind of speak to that too, I guess, because it's a currency life cycle issue, what we kind of look at is, okay, what is the primary function of the metal? And gold, its primary function is as a monetary metal. Silver,
kind of monetary insurance.
Insurance,
could even say,
yeah, right. And so its secondary function is the commercial application of it, right? Is as a commercial metal or industrial metal. Silver, its main use is that industrial metal component. Its secondary use is as a monetary metal. When it comes to those other metals, though,
can I just interrupt you there?
Right
because I think that's why, what do we say? Silver is the fuse,
right,
and gold is the anchor,
right.
Right. So you see a lot more volatility in silver because of what Kenneth is talking about, that it's primarily an industrial metal. So it is a big indication of what's happening in the economy. And even with the pullback in the spot price, that's what I really also want you to understand, that is telling us that the monetary system is changing. You look at the patterns, every pattern shift indicates a change.
Right.
Maybe you understand what that change is, maybe you don't. It doesn't even really matter as long as you go, oh, something is changing. I need to get into position to weather it. What if I'm right? What if I'm wrong?
Yeah. And I feel like there's been more of those pattern changes just
Oh my
happening
God.
faster and faster because it's a sign of where we're at in the currency life cycle. But so to the point of the other metals, they are, I would say, just one function, and that is as an industrial metal. So if we look at this as a currency
Yeah,
life,
that's it. That's the point.
yeah, if we look at this as a currency life cycle issue, historically, the consumer demand for those types of metals will drop. So they might not, be, and historically they aren't the same kind of anchor for your wealth. So, again, you've got to do what's going to feel best for you. But if you're looking for a strategy, our strategy includes the silver and the gold, not the other metals for a reason.
Right.
Yeah.
Right. And really, gold is, thank you. Gold is the anchor. I just don't care about the spot market. Right. But even so, when you look at the comparison, and I just recently did a video on the difference between silver and gold and the different uses. So maybe we can pull that link and put that in there.
Oh, yeah.
Okay. And at Jeff account, thanks, Lynette. You are a delight. Kenneth, too. You are very welcome. It is our pleasure. If you didn't show up, we'd have no reason to be here. So, we really do appreciate your time because that's what you have that you can share. And we know that it's valuable. So we try and bring value back.
Yeah. Thank you.
And at Connor McCarthy 5960, Lynette and Kenneth. I love the Doom Loop series. Thank you so much. But I'm admittedly having trouble understanding, okay, good, what collateral is to begin with in the first video. And why is it a thing and where does it come from? So collateral can be what? Created.
I'll leave that one for you because it's still got some money in it.
Oh, does it?
Yeah.
Okay, so they create all of these different products. And this is where we are going to get to the point where we've got all of these great pieces of collateral because I need the one that Kelly is working on, the inverted pyramid. But in this system, it used to be collateral was something real, right? So if something went wrong, you could actually take something that's real. But in the debt system, someone's debt obligation, because somebody else's asset. And what's that saying? If I owe you $1 million, I have a problem. If I owe you $20 million, you have a problem. Right. But collateral in the current system is frankly all based on debt.
Yeah.
And those numbers that people get blinded by. So it can be debt, it can be something real, but most of the collateral that's created in the system does not really exist.
Right.
It's debt or it's bets that they put, that Wall Street puts value on, that the government legalizes, and they work as long as there is confidence that they work. But once that confidence is gone, then you got to have something real again. And this is where, when I talk about supply and demand, right? Well, let's see. Do we have the physical representation of a Bitcoin, right? Gold. But this is intangible. This is used in one space, in cyberspace, right? Where else is it? They have to make something that looks like it, and they make it to try and get you to think that it's digital gold. Not digital gold. One place. Well, take your pick. One place. 36 places. 33 places. So with the collateral, they can make it look however they want. And just like we were talking about earlier, in the stock market or in any of the inflation markets, real estate, doesn't matter. As the prices go up, you can create more debt against that. But it's fiction. And it only works as long as the system is trusted. And because there is virtually no purchasing power left in the currency, and so the prices, the inflation is rising. And yeah, they start wars because then they're blaming it on the war. It's on the money printers. It's on the abuse that we're all dealing with. But that collateral only works as long as it's trusted, and then people go to stuff that's real.
Yeah, that's very true.
So I don't. Can you steal that for me, please? Because like I said, I probably want to go in and do this better, but thank you for bringing that up. I mean, I really do appreciate it because I'm going to relook at that because clearly I wasn't clear enough.
Yeah, I mean, I think that it is almost a hard concept to think
Hard
about
concept.
because you're like, well, why is it a thing and where does it come from? At this point in the currency life cycle, it comes from nowhere. And it's like, how do you conceptualize that,
That was like, what did she say in that audio that I pulled from Bloomberg this morning?
Right.
We have to go create this.
Yep.
Well, okay. So you're creating it out of thin air from nothing, which when trust is lost, that's where it goes.
Yeah. Yeah, I think a good way to kind of look at it too would be according to your according to like how you had kind of explained it is the collateral only works as long as there's confidence in the collateral. So
if it doesn't exist, right? This as collateral, this as collateral and this as collateral works because it's got full functionality and full demand.
Mm-hmm. So I think like a good way to put it would be like, imagine if you go like your job is to sell, you're like a baker and you're selling sourdough bread and you have a bunch of people lining up every day to buy your sourdough bread. But then one day sourdough bread just isn't in anymore. And now suddenly you've got nobody lining up for your sourdough bread. They went to a different thing. Right. That's
that's what's happening in the markets because it's the movement of all that debt and all that new money that they created since 2008. If it goes over here, it's one way. If it goes over here, it's another way. And yeah, why don't you pull that up? This is not the really good one that Kelly did. So I'll have that for you, the next time. But this goes back to that collateral, right? In derivatives, they reported in the most current one, 714 trillion. This goes back to what you were talking about.
Yeah.
But that had an 88.4% netting benefit. So that collateral really is not collateral. Those obligations, those bets are really up in the quadrillions, which is ridiculous. But what do you have? You have all of these trillions and trillions of fictitious collateral, right? Because they use derivatives to borrow and create even more derivatives. They use private business, commercial real estate, non-monetary commodities. They use these and say, well, this is worth 1.25 trillion. Okay, now we can use that collateral to borrow. Right? So securitized debt, 12.8 trillion in stocks. That's collateral, but it's not real. The only real collateral there is down at that very bottom in sound money because there is a finite amount of it. Period. End of discussion. I don't care if they find more of it. Doesn't matter. There is still a finite amount of it as compared to all those layers of the collateral that the markets have created to make it look the way they want it to look and to make and transfer the wealth. Thank you for pulling that. And wait, don't take it away yet because you might have something you want to say, Kenneth. Or not.
I mean, all I can say is looking at the total notional of the, obligations that
That's just in the FDIC
and
banks.
yeah,
That
exactly.
was
Yeah.
you pulled the numbers from the BIS, from
Yeah.
the Bank for International Settlements.
Yeah.
So that's global. That's just the 6.16 quadrillion is just in the FDIC insured. Those are bets.
Yeah. Side bets on side bets on side bets. And
And that is just how much they're saying the contracts are worth.
Mhm.
That 6.16 quadrillion does not represent the true value at risk. Nobody knows what that is.
Yeah.
So when this erupts, how do you bail that out?
Yeah, exactly. That's why I think that's why, you know, people hear about the Great Reset or the currency reset and maybe think it might be like a little bit of like a conspiracy or something. No, this is the reality, right? We live in a world of real numbers, real actions, real consequences, and the actions that people have taken that you had no say in the actions that they took have led us to the consequences. And that's why a sound money strategy is so important to us. It's very important for you guys to all have, because it is the way that you have your exit strategy from the actions of other people that you had no say in.
Such
right?
a good point.
So, I mean, you know, giving us a call, there's a QR code as well that you can scan on the screen. Set that appointment with us. Just at least have the conversation to know where we're coming from with this and why we think it's so important. This is what me, Lynette, everybody that works here at Zang International, every day, we wake up every day to do this for a reason.
Even Saturday and Sunday.
Yeah, Saturday.
News for you.
Yeah, exactly. No, weekends are like the study days. Yeah, you're looking at everything that happened during the week. But yeah, so I just can't even imagine quadrillions of dollars. That's like an unfathomable amount almost.
Well, that's, that really is the whole thing. We're talking about trillions. Can you even fathom $1 trillion, let alone a quadrillion dollars?
Right, which is 1,000 trillions.
Yes. And so, or 100 trillion, no, 1,000 trillion,
Yeah.
no, 1,000 trillion, which, okay, think about that. No, really, this is so fresh in my mind because I specifically, while I was working on other stuff, I
Yeah.
played that Gabriel over the White House. I see it on Turner Classic Movies, TCM, but you could probably also find it online. Watch that movie, 1933, and they didn't even have the word for billions. Now we're here 100 years later talking about quadrillions, and people just kind of tune it out because that number is so large. I mean, my 10 trillion, I use this all the time, my $10 trillion note.
Yeah.
What's a quadrillion?
Yeah.
I mean, I don't even, I'm going to try and figure out how to show people what that is.
Yeah. Like the scale of that number is just, it's just mind boggling. And again, it's not due to any actions that any of us have taken. We're just along for the ride if we choose to stay on the ride. But the sound money strategy
I'm getting off.
Yeah, right. Getting off the ride.
I want us to just get on the ride that history's shown us is most likely to happen. And that means that you have to become your own central banker.
Yep.
You have to establish a foundation that somebody cannot come in and take it away from you. And this, according to the Bank for International Settlements, central bank, biggest banker in the world, gold is the only financial asset that runs zero counterparty risk. The only one. Not one of two, not one of 10. It's not rocket science. We can see the central bankers doing it for themselves.
Yeah.
Okie doke. Do we have another question? We do. And this is from Square 7944. Shout out to the Zang strategy specialist, Martin S. Yep, he's awesome. We had a great conversation on my favorite pre-33 includes Indian coins. I love those. They're so cool. I have them too. Love them. And Martin does a great look. I'm very proud of all of our strategy specialists because they are the creme de la creme. They're all brilliant. Absolutely. And I mean, you're listening to him and you know, Martinez and Sari and all of them, Riley, everybody, Jen. But besides that, they actually really care. What a concept that this is not just about you. And the nice part about it is, you know how hard you're working for other people. How does that make you feel?
Good. Yeah, absolutely. I think it's very important when I think about it, and I think about how there could be a change in the way we view money coming. That is right.
There's been
right.
Oh goodness.
And it's I think a hard concept for some people to think, because that's all they've ever known is fiat dollars and the system that we're in now. But I mean, every single person that we help, if they call in, it's because they're like, okay, something's been gnawing away at me long enough. And maybe it's something that you just heard on one of the videos. Maybe it's something that was said on one of the lives that makes me like, all right, I'm doing it. I'm giving the call. We have the conversation. And when it resonates and somebody takes that action, they take that step. Look, I think it's a lonely burden to have to hold on your shoulders, understanding what's going on in the economy and with money, because not everybody understands it. Not everybody wants to understand it. Not everybody's going to agree with it. So it's a lonely burden, but to take the action, it's brave. And so to help people get that bravery and take that step, it's really important to me.
Yeah. Yeah. And I know what you mean. And I think a lot of people that are out there watching this, because you know, I'm the youngest of 7. Do you think anybody my mother did, but do you think anybody in my family ever listened to me or put much value in what I had to say? And, you know, that was always kind of curious to me, because I could look at my siblings and I could see how brilliant and talented they were in different areas. Each one of us has some place where we just really do shine.
Yeah.
But they kind of like, because I was the baby. So, you know, now they see, oh, maybe she wasn't so insane and crazy. But, you know, we have to bear this, but it's okay, because we also have to help our family. And I know how hard that is, because some of you out there may definitely be able to relate to this. I'm sitting here, I've got seven siblings, but they all had kids, and then their kids all had kids. And, you know, my oldest brother is a great grandfather, which is insane. Yeah. Yeah. He's a great grandchildren, meaning his grandbabies are having grandbabies, are having babies. And, you know, I'll bet you there are people out there that go, well, my family doesn't get it. They're not listening to me. I'm trying to tell them, I need some help. I can't do this all by myself. And yet, because you're the one that sees it, the burden sits on your shoulders. It does.
Yeah.
You're not going to let your family starve. You're not going to let your family be thrown out in the streets. Right. And so that's a really good point. I never really think about it because I'm so used to that, which is also why you can say anything you want to me. It's water off a duck's back. It doesn't bother me because I'm so used to it. But you are not alone. And I guess that's one of the things I really love about here. And I didn't even realize that because I used to feel alone.
Yeah.
But since I came to Zang International, now I'm surrounded by like-minded people. And you're here at the lives, you too are surrounded by like-minded people. We may be wherever we are in this world, but we are still a community, and we can still make a really positive difference.
Yeah.
So let's answer Scorpios.
Okay.
1964. What's the difference between collectibles gold and proof coins? Well, the proof are the first coins that come off of the press. So they have like the sharpest lines. But if you're talking about new proof, you can also hold those inside of an IRA, and they would have been created for a certain limited number, usually somewhere, 8,000 or so. But you can still hold them in an IRA. The collectible gold coins are in a different category that you cannot hold inside of an IRA. That puts them in a completely different category. That's the one that I want, because you can have a 1 ounce coin go for, do you know what the most expensive coin went for? 15 million,
yeah.
30 million,
Yeah, it's
something
like 30,
like that.
34 million or something. Yeah.
Right,
Yeah.
right. So it's in a completely different, and I believe much safer category. That's the difference. One is new, done in limited quantities. You can hold it in an IRA. The other is old. They don't make them anymore. They're still making new proofs. One is old, and it's in a different category according to the IRS.
Yeah. I mean, to bring it back to the metaphor of the White House versus your cookie cutter home, right? I mean, a proof coin would be like your cookie cutter home, but you just did a custom paint job on the outside. It maybe changed, it looks a little bit different because, your proof coin comes in like a little commemorative case with maybe like a little blurb about it, right?
It does. And they're
Yeah.
pretty. They're great for presentation.
Right. Like a presentational
Right?
thing. It changes the presentation, but it still falls in that cookie cutter regular residential home versus the collectible gold is that one that has the to the point of your house, the historic designation. So
Yeah.
it's a different entity entirely. I know it looks similar because it's made out of gold.
Both houses.
Right. Yeah. And so the
Both
White House
houses.
is a house, but again, you're playing in a completely different kind of asset that is, again, historically the safest way to hold that wealth. So that's the way I would look at it. Yeah, proof coins, slap a different coat of paint on the outside of your residential home. That doesn't stop the bulldozers from coming when they want to build the highway, i.e. revalue the gold. But the collectible, it's got a designation to it that, history has shown time and time again that the bulldozers don't level that house.
Right. I mean, personally, I want to be with the guys that write the rules.
Right.
Because when they write those rules and laws, they do it for their benefit. So I don't need to spend $33 million on a coin to be in that category. That's where I want to be. But at the same time, again, I am so crystal clear that these coins are severely undervalued. And so even though you've got the premiums in there and the fees in there and what have you, I'm still buying it way below fundamental value.
Right.
And by the way, because somebody's out there thinking, well, what if it lost all of its collectible value? First of all, if it enables me to continue to hold it and use it in the normal marketplace, which is what I saw, right? Even though that's the point of understanding on anything that you're doing, what its true value is, because ultimately that's where it goes, period. So if you are quite clear that the Federal Reserve has let you know that the true fundamental value of this is zero, isn't it just like this $10 trillion note? That's why I keep saying to you, do not marry those zeros. They don't mean anything. Doesn't matter how many of these that you have. It matters what you can convert it into. And Colleen 3382. What is meant by derivatives? I was at the bank recently and asked an officer what that term meant, and they couldn't explain it to me at all. Shocking.
Right.
Oh my gosh. So I just did a derivative piece not long ago. So if we could pull the link to that and put it in there, it'll go into it in more detail. But really simply put, a derivative is just a big bet. You can never convert it, and you can never convert it into what it's based on, and it can be based upon anything. It can be based upon your credit quality. It can be based on, is it going to rain on Tuesday? It can,
Right.
I'm serious about that. I'm not actually saying that as a joke. You can create a derivative around anything because you can never convert it into the underlying. Its price action is based upon what happens to that underlying. So for example, let's say that it's a derivative against the S&P 500. Okay? If the S&P 500 index goes up, so will the market value of that derivative. If it goes down, so will the market value of that derivative. So if you realize really simply that it is a big bet, and if you've been to Vegas, if you sit down at, let's say, the poker table or blackjack table, you have some level of control because you can choose whether or not you're going to take another card, right? But let's say you go to the big six, which is that big, huge wheel, and you pick a number and you slap it down there, and the dealer spins that wheel. That's what a derivative is. Right? You don't know where that's going to stop. You have no control because you slapped your money down on that, whatever that number is, and that's how it is. So yeah, I hope that makes some sense to you. But go and watch that video, and Colleen, bring back any questions that you have, because if you have a question, or this is true for anybody out there, if you have a question, at least 100 other people have that same question. You're brave enough to ask, right? So I love questions, and no, there's no such thing as a stupid question. I'm gonna have to get these glasses tightened. They keep kind of sliding down. Yeah. And SQ7944, I enjoyed the last video that Kenneth appeared on. It's a must watch. Thank you so much.
Yeah, super appreciated.
Yep, he's doing great. I'm quite happy with him.
Oh, thanks.
Oh, you're welcome. And he has a very cute son and a very pretty wife.
Oh, thank you.
It's a nice family. It's a nice family. And Pedro Mañana from Instagram says, I bought my silver because I didn't want to take 35 years to pay my mortgage. But now I'm afraid to sell all my silver and my house losing value. How do you solve this dilemma? Well, you aren't going to sell. Why would you sell either your silver or your house? Because you've got to have a place to make a last stand. So you've got to have that shelter. And why would you be selling your silver? You'd be buying more. You'd be accumulating it and diversify it a little bit, because you got to have some gold in there as well. So the dilemma would be to solve this dilemma, call us. Let us know how much your mortgage is. We can calculate out how much metal you need to pay that mortgage off when we go into that overnight reset. It isn't just that we have that strategy. It is also that we are already working on the infrastructure to execute that. And I'm going to say, anybody that is executing the strategy, you need to stay in contact with your strategy specialist, because it's everything. When we start to exit, for parts of it's not going to be so matter that much, but on parts of it to pay off that fixed rate debt, timing is going to be really important on that. So I cannot stress that enough. You don't have to worry about it yet, but I want you to put it in the back of your head, and I want you to stay in touch with us so we can help you through it. So I don't know why you have a dilemma. And it doesn't matter what you want. I'm sorry, but it matters what the reality is. So we may want the overnight. I mean, I don't, but there are people that might want that overnight reset, just like when the prices were running up and how great that is. But it's not going to be pretty out there. No. Even if you're executing the strategy, even if you're surrounded by community. And also, by the way, you want to think about, how do I want to go through this? You want to make sure you have surety. I cannot stress this enough. Food, water, energy, security, barterability, wealth preservation, community, and shelter. If you've been procrastinating because you think you got all the time in the world, please stop procrastinating. We are here to help you I mean, obviously, and I actually don't know this. Are you much of a gardener?
A little bit. I'm,
Okay. Well, we have other people here.
I'm a hunter, not a gatherer. Okay.
Okay. But that's the point of community, isn't
Right,
it?
yeah,
You got to
everybody can
have
do stuff.
hunters.
Yep.
You got to have gatherers. You got to have all of those different kinds of tools
Yep.
and share them. That's
Absolutely.
why we're here. We're here to share the gifts that we've been given.
Yeah. And to that too, actually, bringing up the mantra and the food part of it, I was going to actually say they had found like screw worms inside of cattle in Texas.
Mhm.
And I when I saw it, I put it on our chat for like the office. I was like, this is literally why the food part of the mantra is so important, because if you are relying upon commercial farmers, industrial farming to get food to plate, what happens when that supply chain breaks down? The screwworms are a big problem because they're very, very infectious. They can wipe out massive amounts of cattle. That could drive the price of the food available up if you can't afford it, or if people rush out to get the food and then you go to the grocery store, there's nothing on the shelf. Yeah, I mean, protein is important. It's an important part of any diet. So that food aspect, really, it's like, I'm not saying it's going to be like that forever, right? But it really shows how quick it can break down.
Well, I mean, did we forget what happened in 2020?
Right. Yeah.
You go to the grocery store and the shelves are empty. And, fortunately, we don't have an issue with food. And Sarah keeps bringing in, oh, they're so good. Those tomatoes are like there,
So
and
good.
we've got tomatoes coming out of our ears now. So, we all share with each other, but globally, food scarcity and starving, people is a huge problem.
Yeah.
And that's actually why I planted out. Now, of course, Kenneth's been to my house many times, but I planted out the exterior of my property specifically so that if somebody's hungry, they can pick a pomegranate, they can pick a zucchini.
Yep.
Do my neighbors really know? I don't know if they know what I do or not, to be honest with you. I don't know, because I'm not really out there, that much. But they know they can come and get food at
Right.
my house.
I see it. Yeah. All the time. People will be out there walking through, they'll grab, and then also when you do it up in the winter time, everybody's coming through looking at how you do everything.
Oh yeah,
outside.
that was fun.
Yeah. Super fun. So yeah.
Yep. So I think remind our viewers what? Oh, where? I just said what? Where they can catch me. Oh, yes. Okay. I can't even tell you guys how excited I am because, doing things live really is my favorite, my favorite thing. And so I am so proud to say that I will be at the Rick Rule Symposium. You moved the dates for me. So the other way. Yep. There we go. July 6th through the 10th. And I'm a keynote at that. I mean, I'm really honored. I'm really honored and I'm so excited. And I hope I see some of you there. And then immediately after that, because that's in Florida, we're going to be on a plane Friday night and going to Vegas, where I am speaking at the Red Pill Expo. Oh my gosh. And G. Edward Griffith, I mean, that man, he's so brilliant. He's 95 years old and he is sharp as a tack. That's what I'm working on. I want the same thing when I'm 95 years old. Will you watch me when I'm 95?
Yeah. You're not going to retire.
No, I'm never retiring. No,
You're still being
don't worry. I'm here until they put me in there. Well, they're not. I actually want to be sprinkled over my bug out.
Oh, there you go.
But
Like
that I'm going to
helicopter?
live until I'm going to live to be 100. So you got me for a long time. I'm only 71. I will be 72 in October. You got me for more than 28 more years. But today, that's it.
That is. But yeah, that's exciting though that the engagements are coming up. The Rick Rule
So
Symposium,
excited.
Red Pill Expo, that was huge. That was really exciting. So it's gonna be
When
fun.
I get to do these in person and when you guys come and see me, come. I will tell you right now, we'll have dime cards.
Oh,
We'll
yeah.
be passing them out all over the place. And this is really a great tool. We're also going to be re-recording some stuff. So remember, if you're a client, you get the first one free. The rest of them is at our cost. This is about giving you a tool to go out and talk to your family that doesn't believe you. Have them follow the QR code. We've got different videos and different things that we've put together to help you in your quest to get people to understand what's happening and the difference between sound money and fiat money. So if you haven't gotten one yet and you're a client, call us. You'll get the first one free. If you haven't gotten one yet and you're not a client, become a client, but we'll still send you a dime card, but you have to pay our cost. That's all.
Mhm.
So that's it for today. This was fun today.
Yeah, super exciting and good questions.
Great questions. Great team. Great community out here.
Yeah.
Thank you guys so much. And just remember, let's make a positive difference in this world for everybody. There's enough room. There's enough abundance. There's enough wealth. Let's all come together and make this world a better place. We can do it. And until next we meet, no matter where you are in the world, please be safe out there. Bye-bye.